Well, happy Thursday afternoon to everybody. Welcome to day 4 of the global financial collapse, now underway, now entering its 4th day, although some might argue that it's been underway for, many months away now. Probably September. Early September was when the Fed first started having to create extraordinary overnight repo operations that, instead of being just overnight, ended up having terms of now they've got some. I think our one of our guests today, Wolf Richter from Wolf Street, is going to
Wolfsback, that's great.
Wolfsback, yeah. He actually, so he went all in on a major short position on December 30th.
Really?
Yeah, against, and he was just being ridiculed like crazy. He didn't want to talk about that because he doesn't want to gloat.
Sure.
But he's so...
So he saw something. In the tea leaves, he saw something in the tea leaves.
His actions demonstrate his vision better than his words, put it that way. And I wish we could say the same thing, but only our words can demonstrate our vision, which is usually double by this time of day.
Yeah, unless you're on the wagon.
Unless you're on the wagon, like Special Ed Milewski here, the single biggest shareholder in de-alcoholized beer stocks right now, right here.
Yeah.
They should be sending you free beer. Free beer!
Yeah, so what we're seeing is, I've been through a lot of these corrections. 2008 was wild. But this looks like it could carry on for a while.
Well, interestingly, if we look back at the last 4 major crashes where the markets corrected to 50%, 35 to 50% to the downside, savings loan crisis in 1987, dot-com crash of 2000, and the asset-backed security / mortgage crisis of 2007 to 8, those 3 crashes, the Fed balance sheet was below $500 billion.
What's it now?
It's now $4.5 trillion-ish.
And it goes up every day?
Well, it goes up and it goes down, it goes up, it goes down.
But it's going up.
It's going up. But what has not gone down in that time frame is the combined notional value of the derivatives market, which now stands at $1.2 quadrillion. And so if you're wondering, well, wait a sec, and we're going to get to this later, why if gold was actually the real currency that it claims to be, the real standard, why is it not performed? And it's because of the collusive malregulation among the Commodities and Trading Commission and the largest traders in the futures market, which are US dollar interest entities, in my opinion. I don't have evidence. Yes, this is conspiracy theory, but what the market is telling you today is that it's not a conspiracy. It's underway. It's happening right here before your very eyes. Now, you'll notice that the mainstream financial channels are not referring to this as a financial crisis or a meltdown or any of that, and that's because they don't want you to panic. However, consider that the Fed's first response, again, now to a worsening of the 4th day of the financial collapse that is now underway, is to print $1 trillion, which only briefly reversed the downward trajectory, and which has now resumed. And so, I mean, you can listen to the mainstream media and keep your head in the sand or up your ass or wherever it is you keep your head, or you can tune into the fringe media whack job conspiracy theorists who, against all odds, have been right for almost 20 years now, and that is what we ask of you. Don't listen to them. Listen to us.
It's like they've been feeding the participants this juiced up punch, right? And when they ran out of punch, they said, well, let's just fill it up. And they keep filling up the thing, and they're putting more in, and it's doing. Now it's starting to almost look like they got to start thinking, hey, maybe we should start raising rates and start talking.
Winding down the book.
What?
Deliquidizing the freaking over-liquidized economy. It's like they're sitting up there at the Fed, and they're like, you know what? Seems like we have a problem with alcoholism. And they all agree that the best solution is free booze for everybody. Yeah!
And you listen, like they're saying, like, and I'm not knocking anybody because everybody has the right to their own opinion. But Kramer said today, he said, you know what, they need to put a moratorium on any money going to the government for the next. In other words, loosen it up as much as you can.
Kramer from Seinfeld?
Yeah.
He's running the government now?
He's the main guy.
I love it.
He's always been running the government.
Well, that would explain a lot. Really. That would explain everything. You know, there's also there's some bug going around that people keep talking about. It seems to be canceling sporting events and regular seasons of professional.
There's this beer we're being.
Oh, it's a beer that's going around.
Corona.
Oh, and it's causing people to get sick.
Yeah.
Well, yeah, I'm not going to drink any Corona beer anytime soon.
Well,
so let's see. Like, we could go through the list of things that have been canceled. If you went to the PDAC, it's recommended that you self-quarantine at the very least. If not, go get yourself checked out because, again, as the right-wing or left-wing or whatever financial conspiracy theorist lunatics suggested on February 25th, you don't want to go anywhere near the PDAC because you're probably going to be exposed to coronavirus, and we recommended that they shut it down. They did, and now people are being recommended to go and check themselves into a home for ignorant bastards. And have you noticed that the vast majority of new cases are coming from individuals who have just returned from international travel?
Is that right?
That's the case.
Yeah.
That's the case. You know, so.
Oh, what about this guy from PDAC? He's a native of Sudbury, apparently.
He came from Sudbury, went to PDAC.
That's kind of
got
international.
Back to Sudbury. He's got COVID-19. Yeah, that's kind of international. Yeah, from a provincial.
And you just wonder they don't even have enough test kits to find out who's really got it, right? Like,
well, Jesus. I mean, and don't forget, like, allegedly there are already 2 strains. There's so much disinformation out there, and there's so much information being projected that cannot possibly be based on anything approaching like a thorough understanding of the disease, because let's not forget, it started in December. So even when people say, oh, no, the rate of fatality is only going to be at 3%, it's like, no, well, you don't know that yet. Like, we don't know if we don't know anything about it yet. So, I mean, international travel, number 1, take that off your list. If you had a plan to go somewhere, don't, stay home. Because chances are you're going to get to your destination and you won't be able to either go back to your home country or leave that one.
You may not enjoy yourself when you get there.
Exactly. There might not be a lot to do.
Italy's gotten smacked pretty good, eh? I mean, I guess
everything's closed. Can you imagine going to Italy for your dream vacation to the Italian?
Well, I don't, you know.
And you get there and everything's closed. Like, wow. So Boeing, Wolf. I follow Wolf Richter's site, wolfstreet.com. Rather religiously at this point, because I have found that his thinking and his discourse is very rooted in reality, which is not something you find very much in financial media anymore.
Yep. By the way, it was just announced that Tesla is now bigger than Boeing by market capitalization.
Well, that's not a surprise considering Boeing lost 50% of its market cap since the beginning of the year. Tesla's
for the time being.
Yeah,
we're not saying it's going to stay there.
Yeah, well, I think I think there's one thing that's certain: the outcome of this, in part, is going to be a revaluation of values. I mean, and people are going to say, well, you know, like
philosophically as well.
Philosophically,
like maybe you like nature more than you thought you did.
Yeah.
Maybe you find out that walking in the park is free.
Maybe forests and oceans are, in fact, superior to superhighways and skyscrapers.
Yeah.
Maybe, in fact, having no more than 2 children is actually tantamount to godliness, much more so than bending down at the altar and getting it from the priest.
I wonder how Gucci's sales are right now.
Gucci?
Yeah. Well, you know what? People tend to buy a lot of this high-end merchandise in times of, you know, fluff, but I'll tell you, things have changed dramatically. I mean,
you don't have to tell me, because I spent the morning trying to source organic seed potatoes for the farm. Because, I'm thinking that this thing goes sideways. So here's the worst case scenario. What can happen? What can happen? What can happen? Well, the credit markets seize up. Big corporations in charge of transportation and agriculture can't get the funds they need to operate, pay their farmers. The farmers stop giving their produce to be shipped. The shelves start to empty out at supermarkets, and people stop being able to fill their larders as easily as just going to the store, and have to get a little bit more predatory, competitive over the food supply. And there are too many of us on this planet at this point for that to be the daily reality. So what that will result in is tribal warfare and a serious reduction in the global population pretty damn quick.
I keep hearing toilet paper is a hot commodity.
Well, that just shows you that so many people have shit for brains. That's the top thing you want to stockpile if you're really worried about scarcity is toilet paper. Everybody who's stockpiling toilet paper, please report to the nearest moron extermination camp and step right up. Step right up. Because, I think one of the biggest problems is the average intelligence level in humanity has probably collapsed from the Neanderthal era.
Yeah.
And, it's like teach a chimpanzee a trick and try to get him to stop. It's like, well, now we think we're smart and we've created all these technologies to make us to appeal to our laziness. Anyways, what is going to stop the collapse of the financial market if the Fed announcing $1 trillion capital injection doesn't even slow it down?
Yeah, I don't know. I wish I thought about that. If you just think about it, what's going to start to happen before people get This just doesn't seem like your garden variety correction. What are we down about 22% now?
So this is my point: is that the previous three major corrections had the Fed balance sheet at below $500 billion. Now in this correction, the Fed balance sheet is at $4.5 trillion.
A little bit higher.
A little bit higher.
9 times.
At least. And so if you consider that $4 of that $4.5 trillion is somehow fractionally banked out, which is where, so you take one treasury deposit worth $100 as a bank, and you can now lend out 8 times $800 to $1,200, depending on your capital ratio requirements, which coincidentally were just eased, which moves us a little bit further to a financial crisis where credit markets seize up and the food supply chain starts to seize up alongside it. So I'm sure that a lot of people are sitting here and going wow, man, that is so dark, dude. Why do you think like that? What the hell is wrong with you?
Yeah.
Man, smoke a joint,
smoke some reefer. I was
Smoke some
just thinking,
weed.
smoke some reefer.
Yeah, man.
Reefer madness.
Chill the fuck out, man. Dude.
The average Canadian is not equipped, I don't think, to understand what can go wrong. It's been a country that's
the average Canadian.
Yeah.
The average Canadian isn't equipped to wipe their own ass without getting shit all over their fingers.
They better have a good supply of toilet paper if they're going to do that.
Or better yet, learn how to use the soap and water. Anyways, yes, I know. It's very abusive, very unpolite. But mind you, I do believe that the world population could suffer a 3% general reduction without too much.
Yeah, that's nothing.
Really bad. Hopefully, though, it's not us. But what happens if it is? What if you and me are in the 3% that are going to get it?
Well, we won't know.
We won't know. We'll be pushing up daisies.
We'll be saying bye-bye.
We'll be pushing up daisies.
So long, farewell.
And we won't be dealing with this mess. We won't be commenting on things anymore. Anyways, should we look at the cannabis market? Do you want to have a good cry?
Yeah.
Cannabis market at earlier points today, I was looking at it, was down 13%, 15%. These are the big indexes.
The BI.
Yeah.
I'm more surprised in the move in gold right now.
Okay.
The marijuana sector, that's been dropping. Your indices have shown that. But stocks people aren't rushing to gold yet, are they?
No. Well, no, actually, gold, the action in gold has been extraordinary itself.
People are selling whatever they can to generate cash. That's what it looks like.
Yeah, well, you've got to ask yourself, to what extent are the forces that be who interfere with the gold price through futures market manipulation actively, maintaining a downward pressure on the price of gold? Because The one thing that would really paint the picture of imminent doom in the global financial system was if the S&P kept going like that and then the US dollar started following it while gold started to do this. That would be the canary in the coal mine keeling over. That would be the start of a panic, because the sophisticated participants in the financial industry, if that started happening, that would demonstrate in no uncertain terms that the Fed, the US government, all governments, the elite financial layer had in fact lost control of their giant house of cards, and it was going to collapse all the way to nothing. So, but interestingly, if the entire financial system was going to get a big facelift, revision, rebuild, what do you think would happen to the price of gold? Like, so imagine, it's like, okay, we've got to stop this debt. Stock markets have collapsed to nothing. We got to dust ourselves off and get back to work. They're going to create a global currency called the special drawing right, which is already extant at the World Bank, and somehow try to manage that into a fiat currency. I would think that gold would be part of that. Now, historically, when currencies collapse and gold becomes of interest to investors and holders of wealth again, it tends to skyrocket. It went from $35 to $800 in 1978, or 1987 rather. I keep confusing that date because I have dyslexia. Two of these things. Which
87.
is my index finger? 87 was it?
It was
when it went to
87.
$850 from. So basically, it went what?
No, 78. 78 it went.
Okay, but my point being is that just as at the end of 2008, gold went down to $600 before it took off to its record high of 1920 on September the 5th, 2000, and was it 14? Correct me if I'm wrong. Somewhere in there. 2012, I can't remember exactly.
2011 it peaked.
2011 was
September.
1920.
Yeah.
Okay. We could just pull up a chart and look, but it's far more fun for us to try to remember being old farts, reaching back into our tickle box of a memory. Anyways, quick look at the S&P right now.
Here we peaked in August of 2011, August, September, yeah.
Dow Jones.
Yeah.
Let's see, Dow Jones is back down to back to 2,000 points, down just shy of 2,000 points, or 9%. That after the Fed announced a $1 trillion financial rescue package. So, trillions. I always thought that, well, great, we measure in billions. Next will be trillions. Well, trillions isn't cutting the mustard, so maybe they're going to have to go straight to quadrillions.
Quadrillion's a nice number.
Yeah, or just start buying assets. Like, that's the other thing, is everybody's expecting, to see assets start showing up. It's interesting that the coronavirus coincides with the price war in oil between Saudi and Russia, which, depending on whose camp you're in, is either Saudi and Russia actually having a de facto price war, or it's Saudi and Russia teaming up under the guise of a price war to curbside all of the U.S. shale production. Or another interesting perspective brought to my attention last night was actually this is the U.S. actively supporting a faction within the Saudi royal family who is campaigning to take asset-backed securities. The guy who killed Khashoggi, what's his name? They call him the Sheik, which is actually an old name for condom. I find that appropriate. MBS, mortgage-backed securities.
Yeah, MBS.
Mohammed bin Salam, that's his name.
Mohammed bin Salam.
Anyways, apparently some of his siblings are a little bit put out by the fact that he started to jail some of them on treason after he already stole the kingdomship from who was at the time America's favorite pony in the race. So it was put forth that there was something else altogether behind this. That's all speculation, conspiracy theory, and never ever turns out to be right. So there's no point in even paying any more attention to that. We had a guest just a short while ago, a gentleman named Wolf Richter. He writes wolfstreet.com. Listen to what he has to say. Wolf Richter joins me now. He's the publisher of wolfstreet.com. Wolf, welcome back.
Thanks for having me back, James.
Sure. Wolf, you have been covering the Fed for quite some time. The Fed has started to sort of underwrite the market? Is that the right way to say it? By sort of creating, I guess the last one was $120 billion in the overnight repo market. Does that constitute quantitative easing?
It certainly provides liquidity to market players, and in some corners, liquidity is now a little rough to get. So yesterday had an overnight repo of 120 billion. Today it was 100 billion, but they unwind, and so yesterday's is gone today, and it was replaced by today's repo. But it has new repos out now. It did a 25-day repo for $50 billion, so that'll be hanging out there for 25 days, and it upped the 2-week repos to $45 billion. So this is a significant amount of money. It'll add up to about $100 billion that the Fed increased its liquidity to the markets over the last few days. But given the trillions of dollars that have evaporated from the market, from the equity markets, over the time period, it's not a huge amount, and obviously the economic problems and the financial problems too are so huge that 100 billion isn't going to change a whole bunch.
Sure. And so from where you sit, I mean, it seems to me that, yes, the coronavirus has certainly catalyzed what is going on in the markets now, but it has more or less just really revealed the fragility and the sort of artifice that has gone into the valuations across all markets for, well, as our position here is that this is merely a resumption of the financial crisis that began in 2008 and was only temporarily ameliorated by quantitative easing and zero interest rate policy. Is that kind of what you see happening?
Yeah, I took out a big short position on December 30th that I published back then, and for that very reason, that the market was incredibly overinflated. The market enthusiasm and the exuberance was bigger than I'd ever seen in my life before. There were all kinds of underlying fundamental issues in the economy. That was before the coronavirus came along. And I figured that this can't go on like this. People were expecting the Fed to underwrite the market forever. Every year we're going to get 30% increases in the S&P, even when the economy is barely growing or is not growing at all. So that just doesn't work. And that was obvious before the coronavirus came along. And so now we've got the coronavirus on top of it. And it really reveals, like you said, how fragile this market is, how overinflated it is, how easy it is to just blow it apart. And, we've got the SARS virus back in 2003, and that came after the stock market had crashed in 2000 to 2002. And it barely dented stocks, because they were at much lower levels, and they were at some sort of level of stability. Now we've got this incredible, and it's down 25% from the peak in just 15 days, and it's still overinflated. It has to come down a whole lot more before it reaches some stable levels. Mm-hmm. And the coronavirus is just revealing how overinflated the market is.
Mm-hmm. Yeah. So, I hate to put you on the spot like this, but so what is the number that we look for in the Dow and the S&P that you think is a sort of expected kind of bottom, and what time frame is that going to happen in?
Oh boy, my maxim is that nothing goes to heck in a straight line. And so if you look at the S&P chart right now, it's going to heck in a straight line, and that can't happen. So I'm going to cover my short later today probably. I expect a violent bear market rally pretty soon, tomorrow, day after tomorrow here shortly. And then I expect the whole procedure to continue. And, I've been through 3 crashes in my life, traded through three crashes, starting in 1987. And in 1987, I didn't really have a lot of money online. I was just starting out. But in 2000, I did, and then in 2007, 2009, and to me, it looks like we're going into the 4th crash of my lifetime. And the last two produced results where the S&P 500 dropped over 50%. During the dot-com bust, the NASDAQ dropped 78%. Then I'll look at the other major indices around the world. Shanghai Stock Exchange, which is down 50% or so from its peak in 2008. The Nikkei, which is down over 50% from its peak in 1989. That's 30 years ago. And German DAX, DAX K. The German DAX is a total return fund, so a total return index. It includes dividends, but the S&P 500 equivalent is the DAX K. And that's down 32% from the year 2000. The other European indices are similar. If you look around the world, the U.S. stock exchanges are kind of the exception in that they reached new highs this year or in prior years. Most other indices have been down for a decade or two. And I expect the same kind of scenario for the United States. The exception can't be maintained forever. And I think we're looking at a fairly large downdraft and many, many years before we get back up to that peak.
Mm-hmm. The other crashes that you lived through in your lifetimes, savings loan 87, .com 2000, and the housing crisis / asset-backed security crisis of 2007 to 9. Those are, to me, remarkable because at that point the Fed had not adopted this strategy of inflating the liquidity in the marketplace with such a bend. And the balance sheet in 2008, I believe, stood at somewhere around $500 billion and only reached $500 billion and only reached $4.5 trillion towards the end of the cycle of inflation of the liquidity at the hands of the Fed and in the last decade. So, I mean, to me, it seems like, well, if all of that false liquidity is the first sort of level of evaporation we're going to see in terms of valuation, and then we start to see, real valuations deteriorate. I see a potential where, yes, the Dow and the S&P lost 50% in 2008. They lost 35%, in 2000. $5 trillion got evaporated. But that was real money. That wasn't fabricated money. That wasn't debt that was fractionally banked out or whatever that process is. But so is it potential that this could be, in fact, the numbers could be far lower before we achieve a bottom, inclusive of all sort of bear market rallies?
I think the real issue here, and you could be right, the real issue here is the credit market. Corporate debt has reached record highs by any and all measures. It is ridiculous what these low interest rates have encouraged corporations to do. Yesterday, I just wrote about Boeing, which blew $43 billion on share buybacks, and now it's got an existential problem on its hands because it doesn't have enough cash to deal with all issues, and it was able to borrow this money pretty cheaply, and other companies were too, and they just blew it on share buybacks. So now we have the credit market, meaning bonds and loans, much of it chunk rated, that is starting to struggle with the company's inabilities to service that debt. So I think you will see upheaval in the credit markets, and that will cause additional upheavals in the stock market. But the losses will impact the credit market. So there will be a lot of bankruptcies, and some of this debt will go to zero. And so there will be real trillions that won't be there anymore. And so the stock market is only part of it. The credit market is huge, and the corporate credit market in the United States is gigantic, and including the loan market. So I think this is a very broad-based downdraft we're looking at here, and the stocks are only part of the picture, and that could go down 50%. I think that's a pretty realistic scenario. We're already halfway there, so we don't have that much more to go to get to minus 50, and we got it in 15 days. So,
right.
it could go a lot lower. The Japanese Nikkei went down a lot further than 50%. It's still down 50%, but it went down a lot further, as did the Shanghai Stock Exchange, as did the German DAX K, and many others. So, there's a good chance this could drag on for a long time and could be a very deep plunge.
Sure. The plunge that occurred at the end of 2008 was only interrupted by the advent of what was first the Toxic Asset Relief Program, but was essentially the advent of the Fed buying assets in large scale from the various troubled segments of the financial system. And that had the effect of, giving the market the impression that, okay, the Fed is going to step in and put in a floor on this just through outright asset acquisition and capitalization of the system that way. That option is not really available at this time. At least it's not going to be novel. And in fact, at this point, we have to ask ourselves, well, to what extent did all of that capital fabrication compound the stresses in the system to catalyze this again, another market blow up? So, what could they possibly? What are the tools left to the Fed, I guess is my question, that they can deploy to arrest the plunge now occurring in the markets?
Well, they will certainly act as lender of last resort. So, as they did during the financial crisis, when big companies and big banks starting to run out of liquidity, the Fed will provide funding when the market refuses to fund those entities. And during the financial crisis, GE was looking at the possibility of not being able to meet payroll because it was funding its operations in the short-term markets, in the corporate paper market, and that corporate paper market froze up, and suddenly GE couldn't borrow anymore, and it needed to borrow because it didn't have enough cash on hand to meet payroll. And so the Fed stepped in, and GE wasn't the only one. There's lots of companies like this, and of course at that time the CEO of GE, what is his name, Imfeld, I think, he was on the New York Fed's board. And so the bailouts were handled that way, where the Fed acted as Immelt, that was his name, where the Fed acted as lender of last resort to big industrial companies in addition to the banks. And the Fed is already making noises about that. They will assure that when the short-term funding market dries up for these companies, that they will step in and make sure that these companies can meet payroll. Now, that doesn't necessarily cause stocks to go up. That just prevents these companies from dying in a liquidity crisis. But they will still have losses, and they still will have other issues. And as we have seen in Japan and in Europe and in other places, the Bank of Japan has been doing QE for decades, and they've had a zero interest rate policy in place for decades. And the Japanese banks the stocks are at levels where they'd been in the early 1980s. They're completely crushed. The Japanese stocks overall are still down 50%. The Bank of Japan's manipulations of the markets has only been able to support the government spending and the government debts. It has not been able to really support the markets. And it's the same kind of things in Europe. The European Central Bank is mostly interested in keeping the Eurozone glued together, not in inflating the stock prices of the banks. And so its program has succeeded in keeping the Eurozone glued together. But the banks are the bank stocks are at lows not seen since 1988. So I think we could look at a similar scenario where the Fed is able to prevent catastrophic collapses of some sort of another of real companies, but at the same time, stocks might not make new highs for way beyond our investment horizon.
Sure. You bet, Wolf. I so appreciate your insight, Wolf. It's very spot on as usual, and so we're going to leave it there for now, and I hope to come back to you soon. Thank you very much for your time.
Thank you, James.
So interesting to me that Wolf, pointed out the fact that the Fed would step in as lender of last resort. And just an hour ago, the Fed announced $1.5 trillion in capital liquidity injection. It briefly reversed the downward trend, but it has now resumed after a small blip. And so, if $1 trillion, like if you would have said, the Fed came out, like they came out in, December 2008, after all of the problems and said, we're going to print $700 billion. And that's what we're going to inject in the market. And that immediately had the effect of halting the collapse in valuations in the markets. So back then, $700 billion was enough for the market to say, oh, okay, good, we'll all get back on our heads now. And so this time, though, $1.5 trillion, in other words, double that amount, was not even enough to slow down this train. So what can they do? Like, they don't really have any other tools except zero interest rates, which, what are we at? 0.5%?
Well, the 10-year, we got down to 0.4, is now 0.85. Actually, rates have held, like, they've moved off their lows and they're holding. And I'm hopeful that's because people realize, maybe, I don't know. I say I'm hopeful. I think if rates started going up, that would make people feel better, because rates going down aren't making people feel better.
Well, no, I mean, yeah. If the value of money is zero, then the value of money is zero, and that has grave implications for your ability to stockpile toilet paper, which I didn't realize it was such a thing, and now I'm a little bit worried.
Remember that book, Brave New World? I think it should be called Grave New World.
Grave New World, yeah, and they should be handing out Soma, actually, which I think was a loose metaphor for mescaline, because I think he was under the influence of that when he came up with
Aldous Huxley?
Aldous Huxley,
Yeah.
Yeah, no, I took his advice and consumed copious quantities of mescaline, and I found it very enlightening, to say the least. Anyways, so I don't think that there's any reason to expect this bloodbath to discontinue. We're going to go have a look at the cannabis market now, just because I feel like we're
ignoring it?
No, I don't think we're ignoring it, but I feel like we're slowly, but it's like being in a patient's room that's got stage 4 cancer and has been given moments to live, and it's like the family's going in and out of the room to
say goodbye?
Basically, pay their last respects. And given what's happening, I mean, the cannabis market is certainly not in a position to reverse or even slow down its plunge. So we'll start with a quick look at the large cap cannabis index here up on your far left is down 15.81% on the day. 15.81%. That is not as much as the Midas Letter Venture Index, which is down 16.7%. The CSE index, which represents mostly U.S. large caps, is down 14.07%. And the small cap cannabis index is down 12.89%. So there's zero good news there. Let's take a look at the majors, though, and see what is trending. Now, this is obviously X of Tilray, though I do want to add Tilray to this, even though it's a U.S. symbol. So Canopy Growth down 13.8%, Kronos Group down 17%, Aurora down just shy of 20%. And that's astounding. Afria's down 17%, Hexo's down over 17%, Organigram down 13%. I mean, it looks like the cannabis industry could become a penny stock market unto itself soon enough. What do you got to say to that, Ed?
You know what? Like when the party's going full bore and you're in it, and you got to look around the room and realize at some point they're going to stop. Except in the United States where they keep replenishing the punch bowl, but yeah, this marijuana sector has knocked the wind out of a lot of people's sails, hasn't it? Like it's
T-God, 28 cents. T-God, 28 cents.
Load the truck.
Acreage Holdings, $1.98.
And people, I've been through this many times. When stocks are over, it's over. Don't try and find the bottom. Wait for some technical indicator to say things are changing. Right now.
Right. There's nothing to suggest that the bottom is in.
No.
Technically or fundamentally. In fact, the absence of a response to the Fed's $1.5 trillion rescue package should actually serve as a notice that fundamentally this thing has got a lot more downward thrust to it than probably anybody thought it would have. And the other side of things that to keep in mind is that, everybody's pointing at the coronavirus and saying, well, this is a coronavirus thing. It'll be over as soon as the coronavirus is over. Well, I don't think so. The coronavirus is the catalyst, but it's not actually the fuel that is burning the fire. It's just the catalyst that started the fire. And yes, the coronavirus will have a resolution within a couple of months. Spring is here, higher temperatures, less susceptibility. There's a vaccine entering human trials next week. We already know that remdesivir by Gilead Sciences has been effective in remediating all symptoms of even the worst case of the disease so far. That is currently in human trials in China and in the United States. So, as far as that is concerned, that's kind of almost already in the rearview mirror, despite the fact that the leaders of Canada and the United States have now been theoretically exposed to the virus. And that's kind of a historical first in our lifetimes.
All of us probably have already been exposed to it.
Well, I had that grinding cough for 2 weeks and 3 weeks, I guess it was.
Did you ever get tested?
No, I didn't.
Jesus.
I called Ontario Telemedicine because that's what it said I Googled what to do to find out if you have it. It said, whatever you do, don't show up at an emergency room or a clinic without calling them. I thought, okay, and then it said, call Telemedicine Ontario. So I called Telemedicine Ontario. There's two options. Click here push 1 for member services.
Right.
Push 2 if you want the company, if you want to dial somebody's company name directly. So in other words, boom, I'm stopped right there, nothing. And so really, there's no easy way to figure out what to do. And if they're in the absence of any clear information on what to do, i.e. stay home and call somebody as opposed to show up at a clinic, well, what are you doing? You're going out, you're thinking, geez, I better self-quarantine. Well, I'm going to go to the grocery store because I'm going to need this, that, and the other thing. I better swing by here and, pay this bill, that bill. I better go get some more of this. And next thing you know, you've merely infected a multiple of yourself with coronavirus. So, I don't know. International travel is off my menu. We were talking actually next week, maybe we should pull the show work from home.
Isn't it interesting though, like for instance, a lot of people would like to travel to Italy, for instance, and go to Rome or go to, whatever city they want, Milan, Venice. And yet right now, isn't it funny how, I'm not so interested in going to Italy. Why would that be? It's the same Italy, but why do I react differently?
Well, because you can't get in now.
Well, no, but you could probably get in.
No, you can't.
You can't?
No, the border's closed.
Oh.
The country is
sealed.
But
there's places where you'd like to go, and then all of a sudden you don't like to go. What's the difference? Either they're nice places or they're not.
Well, it depends if there's a pestilence afoot. A pestilence or a plague
pestilence
underway.
Afoot?
A pestilence afoot. There's a plague underway. The Black Death of 2020.
I know. It's just interesting. It's just...
It's remarkable. This is... you look at the emergence of these viruses in the last, since SARS in 2023, the multiple flavors of bird flu, and it's like all of these new diseases have only started emerging since 2000, when the population absolutely began to run rampant to the upside. And, there's no denying that the destruction of natural ecology coincides with the elevation of biological threats, i.e. viruses, bacteria. And so, but has that slowed us down from our rampant growth at all? No. In fact, we get freaked out if the market isn't growing, if the economy's not growing.
I know.
If our rate of destructive activity does not maintain a minimum of at least 2%, we get upset. And I think that might be our undoing.
Well, why is more better? If you had half as much, would you want to get to where you are now? It seems to me this idea of more. Why don't we have enough? Why is there never enough?
I've got enough. I've had enough. I'm out of here. Well, what is enough?
Enough is cover your basics.
Well, what do you mean?
Well, like eat.
So, but
You got a place to sleep, shelter.
Have enough food for a week, a month,
Well,
a year?
let's harken back to the day of the hunter and gatherer. They just went out day to day.
Some guys called Edvard says that we're just mad because he got the last roll of TP, bro. That's it. We're pissed off at you, Edvard, you damn toilet paper hoarding. Anyways,
what is enough? I mean, how many cars do you? How many of everything do you need? How big should an average person? How big is their house? You got some people.
Yeah, no, that's just it. I mean, most people, if you said, well, how much is enough? They probably couldn't name a amount or a figure or inventory of items.
There you go. The big P.
Yeah.
No, you know what? If you talk to a person that's been around for, number of, a couple of generations, and, I know guys that are in their 70s, and, they have a house that maybe has 3,000 square feet, and they probably never step into 2/3 of that house. So,
it's too much house.
Too much house. Meanwhile,
back at the ranch. Are there any, let's talk about what stocks could we buy now that are going to do well as long as this crisis is underway?
Yeah,
You got any ideas?
No.
What?
No.
What do you mean no? You can't say no. We're the TV guys. We got to have an idea.
You know what? Look at.
How about Walmart?
Can Boeing go under?
Can Boeing go under?
What?
Absolutely.
Just talking to your guest there.
$43 billion in debt.
And they have all this debt, and they raise money. What do they do with the money? They use to buy back stock. They're not doing what they should be doing.
No.
Now, I'm not saying, I don't really know what they're doing. All I know is this. The stock was 400 and change a year and a half ago. It's now $165.
Yep. Down 50% from the top of the year.
Yeah. And the airline industry's
Walmart is down on the day. So that's not working. What other stocks do you think would do well? How about Unilever? Unilever is private though, isn't it? No, it's trades USD. Here we go. Unilever's not really exhibiting the same kind of. Oh yeah, it's going down. Never mind. Belay that thought. It's suffering too. How about Palladium? Palladium is down below $1,800 now.
So that got up to 2,600. So it's lopped off 8 on 26, 8 on 24 is a third. So slightly less than a third. 30% of the price of Palladium is gone. You remember we were talking about our friend's company, Kerry Knowles, the chairman, I believe.
Oh yeah, Generation Mining.
That stock had 74 or 75 cents. I just saw it go by today at 22. Hey, it's on sale.
22 cents. Yeah, well, I mean, this is the thing. When the sell-off occurs, it takes everything with it. And the one lesson from 2008, I recall, is don't think that everything's going to bounce back when things start bouncing back. It's a very selective process. So gold, if 2008 is any lesson for us today, gold is going to be the best asset class to be buying when the bottom arrives. The question is, how are we going to know when the bottom is arriving, Edward?
Well,
if it goes up 1,000 and then down 2,
look.
Technically, it says it's over. But
maybe the market becomes range bound for a while, like it did in, from 2008 to 2011. Gold went on a meteoric run. And then when the world thought, hey, maybe it's safe to get back in the market in 2011, they sold the gold and bought the market. Maybe it's going to be that kind of scenario.
Well, so that was essentially representative of stagnation in valuations from 2011 to 2015 in many cases. Well, until, of course, except for the Dow stocks, the S&P stocks, which at that point the Fed had started to basically subsidize through $45 to $60 billion a month in quantitative easing, right?
Yeah.
So, can they do that again? Like, what can they do? What can be done?
I'm just taking a look.
I know. Buy a farm and raise some chickens.
I just can't help but think that when you print all this money, you really show what people are really made of, because it's all about the money, and then our species becomes secondary to the money, which can't be right. It can't be right. Can it?
Does money matter more than the individual? In most cases, the answer in this day and age is yes.
Yes, but is that right, though?
Is it right? You mean morally right? Or politically right? Or, yeah, exactly.
There's a documentary called Progress, and you got to watch that. It basically says, for all the innovation, for all this and all that, the moral compass of our species has gone down, not up.
Right.
And so there you go. That, look, when you're full, anyway, I don't even know where to begin. All I know is that we're we've lopped off in 3 weeks 20-odd% from the market. Why can't this go to 30 or 40% or 50?
Well, I think it's going to go to 50. I don't see any reason for the market to slow down its plummet below 17,000 Dow. I just don't see it. I mean, if you consider that the growth in valuations in the stock market is due to buybacks as a result of cheap capital, then what was the value of the S&P 500 before the first toxic asset relief program set in?
And what was, and were we talking, when was that toxic relief program set in?
It's the end of 2008.
Oh, okay. So the value was about 1,000, I think, or no, 1,300 or something? I'm going to look it up here.
So that's where I think that this market bottoms out, personally, based on a fundamental sort of high-level overview and theoretical.
2008, oh my God, this is scary. January 2nd, 2009, we were at 750. That might be but there's the chart of the S&P going back to 1986. You can't even see the 20% drop that happened in okay, I got that. What did I do? Look at this. That's the asymptotic curve, and that might be a major top that lasts for a long, long time. It may be early to tell. I'm not going to stick my neck out and say that's it. We could have been there, it could have been there, but no, now we're here. Can you imagine the market, in 2008 we were at 750. We went to almost 3,400, right?
Yeah.
And we talked about this before. That corresponds to how much money's been printed. They've quadrupled the amount of debt, and they've quadrupled the size of the market. Because the money ends up back in the market, because that's where all the action is.
Until it's not.
Until it's not.
Until it is not. Okay, so then let's see here. Where was the Dow?
We're closing
back
right
in
at the lows today on the S&P, it looks like. I don't know that for sure. 25.15, is that, yeah.
Say 2009, let's go wider here. 2009, right at the bottom, the Dow was at 7,522. Actually, that's not the bottom. This was the bottom. 69.29.83 was the low.
And that was in the 08 or beginning of 09.
Well, it bottomed. It actually bottomed in March.
Yeah. March 2nd looks like.
Yeah. So since then,
we've had a bit of a run.
Yeah, it's 16,000.
And if you look where we're at now compared to where we were, why aren't you happy? You're up a lot of money.
Yeah. Well, so it's gone up 100, 200, 300% almost. Its high was 300% of the 2009 post-collapse low. So can it lose 200? It can't lose 200%. See, this is another interesting conundrum. You can always make many hundreds of a percent, but you can never lose more than 100%.
I know. That's why if it get cuts in half, if it drops 50%, you get cut in half. But to get back to that where you were, you got to double.
Remarkable.
A little bit of.
Okay, so our expectation then for the last day of the week, is the collapse going to continue? Is it going to pause? Is it going to reverse?
Well, I don't think we're going to see a reversal. I think if anything, we get a wicked bear market rally at some point, like what Wolf said. Mm-hmm. Is it going to be tomorrow? Nobody knows.
Right.
But let's say Russia and Saudi Arabia
Kissed and made up.
Kiss and made up, and then oil jumped, say, $5 or $6.
That would be an uplifting feature.
For a bit of a rally, right?
Sure.
Those are the kinds of things we had to look for, but...
Sure. What if they announced that remdesivir does, in fact, cure coronavirus symptoms or COVID-19, the disease that arrives from the virus?
Wow.
That would certainly catalyze a reversal.
Yeah.
What else could catalyze a reversal? Maybe if they announced that virus that showed very strong ability to, but they can't, problem with a vaccine is it takes time to demonstrate its efficacy. Not like a cure, which it's like, well, if the symptoms end, it must have cured it. Or at least it has ameliorated the symptoms. Clearly I'm not a doctor. Doctor, but
Hello,
it's going to be interesting to see what the Fed has now to say for itself, the Fed and the Treasury Department, and like what are they going to do now that $1.5 trillion injected capital had zero effect.
New lows on the S&P, 2490, under 2,500.
Wow.
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 Boy, I'll tell you, when you look at that 20 or 30-year chart or the 100-year chart, whatever it is, the drop hardly registers.
Really? So at this moment, the S&P,
where's the drop?
At the end of the day here, the Fed the S&P is down 9.12%.
That's the biggest percentage drop we've witnessed.
Dow Jones down 9.66%,
they're all
2,275 points. I think now replacing the largest single-day drop of last week with this new.
How many points?
2,275.
That's a little bit more than the last one, yeah.
Okay, so we've set some new records to the downside in terms of single-day performance. Look for more to continue, and we'll be here for you. We'll be here for you because we're not really a big fan of what's being said in the mainstream. All they are capable of doing is reporting statistics, and the statistics can be easily manipulated by the data, and the data is under the control of federal agencies. So there you have it. There's our show for today. We do hope you appreciate it. If you did, smash the like button. Don't forget to subscribe to our newsletter at MidasLetter.com. We have lots of valuable trading strategies for you there.